Is with our senior fund manager at Mirae Asset Mutual Fund. Varun, good to have you with us here. Good afternoon. Now, by the way, do you have exposure to the IT names, Varun, in the fund?
Yeah, good afternoon, Prashant. Of course, we do have exposure to IT space in our funds, yes.
Okay, and have you done anything with it over the last 10 days as these stocks have taken a real beating?
I think market is, and of course, worried about the terminal growth and the terminal values of most of these companies. I think in the short term, the fear may be getting overdone. Of course, a lot of these businesses will have to go structural change and renovation. I think there'll be winners and losers. So it's very early days. It's very, very difficult, Prashant, to take a very definitive call as to how things will play out. We are also trying to understand the implications of a very fast-changing technology. I think the whole world is trying to get its handle on it. So as of now, we are not doing any change as such. We continue to hold what we own, and of course, trying to figure out how this change will exactly play out. I think there is a lot of price damage which has happened. Things may not actually be as bad as being feared, but of course, we don't know how the eventual game will be.
You know, if you were running like you did the AIF at one point, and you were sort of more getting in and out, are there tactical trades here now, Varun?
Again, Prashant, very, very difficult to say. With every day there is a new announcement, there is a new newsletter, there is a new model or a product being launched. I think there is a lot of uncertainty. While I think there might be value, but market, of course, abhors any kind of uncertainty. And therefore, till the time people have figured out how exactly this will play out, I think this kind of volatility may continue. And of course, there will be great opportunities for wealth creation. And of course, there will be losers also in this whole change. But I think very early days to be very definitive about how things will play out.
Hi, Varun. Good to see you in. Our last chat, you were mentioning, it's a good time to increase allocation to equities. I think that's worked pretty well, because last 20 days or so, the headline index might have not moved too much, but there is signs that, the mid and the small caps are coming back to life. Though I still think, the first couple of weeks of March, as we see normally because of the year-end phenomena, there could be some pressure creeping back into the broader markets. But that's normally, a seasonality thing that plays out. Getting back to the sector that I want to discuss, defense. I recall we chatting that, we're looking forward to higher allocation in the budget. It seems that there was one space that actually the allocation was as good as what was expected was defense. No worries, right, on that front. The stocks have corrected a goodish bit from the top. Your view on that sector?
Yeah, I think, Nigel, broadly, if you look at the results, not just in defense sector, but across sectors, if you look at Nifty 500 as a larger universe, the results, if you adjust for the labor code change, has been pretty robust. I think good double-digit kind of earnings growth. After a long time, we are seeing signs of revival across the board. Be it banking, finance, infrastructure, capex-related stories, consumption stories, and I think this recovery will only strengthen in the next few quarters, and that is why that explains our bullish view on the Indian equity markets. The risk appear to be coming more from outside. Specifically about defense, I think that's a sector which will have a lot of tailwinds for growth in the next 3 to 5 years. Not just we have a large domestic requirement, but a lot of avenues for export also. So we believe that the tier one PSU defense company should continue to do well. There are a lot of companies in the private sector which will get added to the overall universe. And I think we will see a lot more listings in the next 6 to 12 months. And overall, the space looks quite attractive from an earnings point of view.
Yeah. The other space, of course, there's always something new every day nowadays, right? There's the brokers and the exchange BSE. Again, exposure here, Varun?
Yeah, so I think from a 5-year point of view, there's a great opportunity for wealth creation. The financialization of savings as a theme is very strong. Of course, in the short term, will there be some impact because of the change in regulations? Yes, there would be. I think to that extent, we might have to see some lower volumes. And I think this is something that the government has been trying to do, our government and the regulator have been trying to do in the last 1 year, curb excessive volatility. But I think broadly, the trend is fairly positive. And as such, various market participants, be it exchanges, depositories, brokers, I think they should have a fairly robust growth from the next 3 to 5 years.
I see. And you own these in your portfolio?
Yeah, we would. I think we would have presence across most of these places.
I think BSE has recovered quite sharply from the lows, about 1,000 rupees, I think. Well, let me just put this up. Not 1,000 rupees, beg your pardon. It's come up 27, 26, $100 from the lows. MCX is the other one, which I think recovered quite sharply from the lows as well. Right at the word go. 21.89 was the low, and stocks at about 23.25. So both have come up. I mean, in terms of brokers, look at Angel, etc. Angel is down 4, which means it's up about 4% from the lows as well. MK, maybe, you could look at Motilal Financial Services, sideways, but all of them off quite a bit from where they were trading early on in that sense. So that's the picture. 1,800 stocks are lower, and you got about 1,300 stocks which are higher as we stand right now. Power Grid, of course, is having a very, very good move. Power Grid was, what, $250 10 days back. It's at 300 now. So that's a very sharp move. And of course, I mean, there was numbers and there was the upgrade in terms of the guidance, etc., which we had highlighted. And I think that triggered the entire move. But that's a very, very smart move. GMR Airport is having a very good day. Again, numbers was very strong. It's up about 7% as things stand. Yeah, I mean, there's no, a shortage of names going up on decent-sized volumes at this stage. Anything in real estate, Varun, on your radar? Again, a sector which was the top underperformer last year. This year, of course, has gotten hit badly again.
I think the sector is clearly undervalued. I think we have seen very significant monetary easing, because of which the mortgage rates have come down quite significantly. I think last year, mortgage rates were running at 8.5. Today, you're getting mortgages at 7.2. So there is a very significant saving. I think the stock prices have also corrected very significantly, and therefore, we believe the sector is quite attractive. I think it may take it time, but I think 7-8% kind of volume growth, 7-8% pricing growth looks quite attractive. The balance sheets are completely ungeared. So I think the tier 1 real estate space looks quite interesting.
Varun, the sense I'm getting from you is you're constructive on a fair bit of things, but nothing's going to happen quickly here, right? You got to give it time. So you got to be slightly long-termish across spaces.
So Prashant, if you look at it, the broader markets, we had Nifty delivering 3% earning growth in FY25. I think this year we hopefully end with it 7 to 8%. I think FY27 will be the first year, after 2 years of slowdown, that we will see a double-digit earnings growth. And the bigger story will play out, of course, in the small and the mid-cap segment, where from a negative 5 to 10% earnings growth, we will move to, let's say, a 10 to 15% positive growth. So I think the economy is clearly on the mend. We had a cyclical slowdown in the economy, which is now turning positive. So we are very positive on cyclical sectors in Indian economy, be it banking, be it capex-heavy sectors, be it auto discretionary consumption. I think, of course, the risks are coming more from the export sectors, and hopefully with the US deal and the Europe deal in the next 12 months, outlook should also change on that side. So broadly, we believe Indian economy is clearly on an uptrend, on a cyclical uptick, and as such, earnings should definitely get better.
Okay, Varun, thanks very much for that. We'll leave it there. Appreciate your time here on CNBC-TV18. Nigel's walked across to the wall with the